Hey everyone, welcome back to the channel, where we talk about agriculture and other things. The point of this channel was to educate and clear up misinformation, but sometimes reading the comments, an accurate depiction is this picture.
I think it was somebody that was on here was talking about a farm that was for sale. It was like $1,200 an acre. This guy and one of his neighbors, they were kind of interested in it, but nobody would take the bait. Nobody was interested. And they were trying to sell it private. And the guy that was listing it came to him and he said, "What about $1,000 an acre?" He said, "The problem isn't the price of the land." He said, "You could sell me the land for $500 an acre, but it's going to cost me 18% interest. It doesn't matter what the price is. It's the interest that it won't work." The first time we had somebody on here talking about...
We had Rob Brenneman on here.
Yeah.
And he was talking about interest rates. And people my age, I grew up with 3.5% interest. There was young people commenting when he said, I don't know what it was.
Comment about the interest rate.
Yeah. 20, what was it, 26?
1%.
21.
We're all complaining.
Shit.
I mean, there was a decent amount of time that money was 16 to 20%, not just a month or two. It was
Yeah.
a couple, 3 years.
They were in the comments like they just couldn't even believe it.
Yeah.
Because we've never even seen a rate that high,
That was a TikTok clip of a show called Barn Talk. I don't watch the show, it's been suggested to me. What few clips I've watched, the guy that hosts it's an idiot. As he just said there, the price of land didn't matter, it was the interest rate. Well, obviously that means that it matters because the interest rate and the price of the land is what formulates a payment. So it obviously does matter. I mean, that's literally like taking column A, then adding column B. Column A being the principal, meaning the land, and column B being the principal, or the interest, and you add it together for a payment. So as one changes, it changes the other. And for those who don't understand, that is precisely how land prices have went up. So when interest rates are no longer a factor, you can afford more for the land. Just like your automobile. If you no longer have to take interest into the equation, you can probably pay the manufacturer a higher percent or rate for the vehicle. Now that interest is a factor, and that's still in your payment, nobody gives a shit about what the thing costs. All you care about is what your payment is. You look at your payment. Can I make the payment or not? Is my payment affordable or not? So then you take your column A and your column B. When you get rid of column B, meaning the interest is gone, you can afford a lot more on column A. Cheap interest rates lead to longer-term problems. This is a Federal Reserve 10-year Treasury. This is just your Treasury market. 10 years, here's your chart. I mean, you can see what it's done over 10 years, and you can go on their chart. I mean, anybody can look this up on Google. It's just the St. Louis Fed. Look up the Fed charts, 10-year Treasuries. Now, why did I bring up a 10-year Treasury? Well, 99% of you don't have a clue, but the 10-year Treasury is pretty much what dictates a 30-year mortgage. And banks like to make about 2.5% to 3%. So if you come in here and you look at your 10-year Treasury, what's the 10-year Treasury doing today? Say it's 4%, and you can add about 2.5% 3%, then your mortgage is going to be about 6.5% 7%. That simple. Anyway, this is a 10-year Treasury starting back here in the 60s and going up through the 80s, when you can see the high point of the Treasuries, and they have been in a decline ever since, up until 2020 when they started turning back around. But they're kind of forming a sideways pattern now. I don't know if they'll go up or if they'll go back down. That's debatable as to some economists' long-range projections. Regardless, you can see that even where they are right now is still relatively pretty low at the early 2000s. They were much higher in the 90s. But you can see where the interest rate was. So what you can do by looking at this, you can just pretty much pick a date and time and add, a couple percent to it, and you can find out what the interest rate was at that time. So that allows you to go back and do cross examination to determine what the interest rates were. And that's literally what I did here. I went back through and I wanted to compare 2022 with 1981. And 2022 was about the peak of inflation. 1981 was around the peak of inflation. Well, how do we know it was the peak of inflation? Well, we can look up our commodities prices. And that's where you have this chart, which is where we just started. And these charts are your grain prices. So you can see all your grain prices. And I want to highlight, if you look about 81, how the price actually continued up and then it started to decline. 82 declined. 83 was back up a little bit. It wasn't a big decline. It was only down by maybe a few cents, and hung on till 84. But about late 84 into about 85, you can see how she started just really coming down. 86 coming down, coming way the hell down, and you're down by about 50% by about late 86 that you were when you started in 81. And by 87, we actually started coming back up. So you only went down from about mid 86, or way down, about mid 86 up until about mid 87. So you're only down for a little over a year. Then it actually started coming back up, and by 88, we were clear back up to about where we'd started when we started our decline in 84. So it was kind of a sideways, and it started down, then back up, and kind of started back out. Now you got down here and you look at these current prices, and they're looking a lot more to me like that same time frame from 2010 through 2014 in there. We started at, if you just, this is the calendar year average here, and the years over here, so these are the months. But if you just go through and you start out here and see it goes along, spikes way up, and comes way back down, and that's pretty much what we did here around 2020. Way over, sharp spike, and that was all explained in the last video, so make sure you watch that last video. And it's also easy to calculate your national corn yield. Now I went ahead and I used our county, the county I live in and farm in, but I also compared 8 other counties across Iowa, and they had all that data online of what the county average price for yield was. This wasn't an exact farm. This was county average price of the ground, county average yield, and then average selling price in Iowa as a whole on your grain. So that's what I plugged in. So I said we have a 1,000-acre farm. We're going to split in half with 500 acres of corn and 500 acres of beans. So at the county average in 2022 is 175 bushels per acre. So 500 acres is 175, 87,500 bushels at $6.36 as an average. Gave you $600,000. And in 81, same scenario, 500 acres of corn. Average then was about 109, and then see about 54,500 bushels of corn at an average price of $285. Gave you a total gross of $155,000. Now, so I went in here and I said, okay, now what if the farm that you were looking at, what if you'd bought 1,000 acres in 2022 and you just happen to have cash half the value of the farm? So I said, what's the value of the farm? The value of the farm was $8,300 an acre. So 1,000 acres, simple math here, that's $8.3 million. And if you had half the cash, that means you put $4.1 million down, $4.15 million down. Then you had to finance the other 50% through a bank. So I had to go look up the interest rate, which is where that chart came in on the 10-year treasury. That came in about 6.9% interest rate. I did the exact same thing back in 1981. Again, we're comparing peak to a peak, and the interest rate would have came in about 17%. Land at that time in our county was, again, I'm sticking with my county for price of land and yields. Yeah. So $1,595, 1.5, $9 million, $797,500 in debt, or $797,500 down, and or half in debt. So you got half owned, half in debt. Anyway, take that, you take a 30-year note, and you break it down. 30-year note, we can do that very simple through a farm credit mortgage calculator, and it gives you annual payment of say $344,500 or $344 an acre. Again, simple math. And then over here, looking at same situations, 30 years, break it down, about $138 an acre payment. So I said, okay, now we're just looking at the corn. So it's a 1,000-acre farm. We're just going to be looking at the corn, which is just half the farm. So we're going half corn, half soybean farm. So we're just going to look at the corn. But anyway, looking at the corn, I'd give you a $1,200 an acre gross, which is the bushels per acre times the price, then minus the land payment. Leaves you $866 left over. Going over here, same exact formula. Gross minus the land payment gave you the $171.88 left over. Now, I went to a CPI calculator, and if you follow my channel, we've proven the CPI calculator is wrong, depending upon the year, and there is some formulas you can use that, and you can also use other online inflation calculators. There's more than just a CPI. That's what the government publishes, and it's low, and you can pretty much prove that going back to about 81 is probably suffering somewhere around 30% low. But just the CPI spits out about $608. So I said, well, just for the giggles, so you know, we're technically better by over $100 an acre modern day equivalent than we would have been inflation adjusted back then. Now, what if I would have just only had 6.9% interest rates to pay back in 1981? Well, then you CPI adjust it. It comes out almost the exact same dollar amount that it did here in 2022. So in other words, these peaks, these grain price peaks, and what your margin is, what your acre, in terms of buying capacity, according to the CPI, are identical. Now, where it's not identical is the fact if you actually plug in the real CPI and probably add about 30%, then even with the high interest rates, this number comes out just a shade under where we were. So in 81, things in realistic terms were very comparable to about 2022. Now, going back to these grain prices, you can quickly see that, you know, you had a peak in here in 2022, and then you had a quick, damn near 50% retraction that was within 2 years, and it lingered on pretty quick. And the percentage of retraction was greater than it was in the 1980s. And then you can come down here, you can start seeing like your charts, corn and soybeans, and you can see how these charts were much more of a sharp peak, whereas back in the 80s, if it would have went back that far, it would have been a smaller, lighter bubble. And you can also start to map to about every 10 years, you end up with a bubble. Which, if you'd watched my last video, that's why I'm predicting somewhere around the late 2020s or around 2030 that you'll probably see some pretty decent grain prices. Now, you have a whole bunch of economists on the internet saying, oh, this is not like the 80s. It's not like the 80s at all. This is more like the 90s. You know, the 80s had that high interest rate. Well, I pretty much just debunked that theory by proving exactly that the numbers almost flow exactly the same. So that's bullshit. Anyway, if you go into Google and just plug in Google or use their AI program, you can find hundreds of articles about how farmers are literally losing their assets. I mean, they're just giving up their equity because they're not making enough money farming, so they just borrow against their ground. And you saw a huge amount of refinancing. And you're also seeing this in farm debt. I mean, you can go to 100 different charts and you can see just farm debt just skyrocketing. And it's amazing how many of these farmers, you go down to the coffee shop and, oh, things aren't too good, but you know, and bad, we'll get through. So you remember this guy? Remember we beat him up on a video? Let's see what he says.
Creditors inside of America are starting to shut down operating lines going into 2026. What's hard about this is that they are giving long-time, well-established customers until the end of the year to find a new source of financing. And unfortunately, this isn't a problem I'm talking about happening in the future. It's happening right now as I'm recording this video. And the uncomfortable truth is that if you're an American farmer, rancher, or just an ag business owner, the financial future of your business is at way more risk than what you may realize.
How many of y'all watched the 60 Minutes interview on TV about farm crisis?
Manufacturers use more synthetic fabrics. Daniels and Carmack have had to take on second and third jobs, not just selling t-shirts, but driving trucks and repairing boats when they are not in their fields.
You've said you have almost no equity left.
It's getting down. It's getting down. It's getting low.
You think you can make it another year?
I don't know. Do you just keep going, rolling the dice, hoping things will turn? I mean, it's not looking good.
President Trump has promised a new bailout for American farmers, as much as $13 billion that he said would be paid for by the tariffs.
We're going to take some of that tariff money that we made, we're going to give it to our farmers, who are, for a little while, going to be hurt until it kicks in. The tariffs kick into their benefit.
Remember when Donald Trump had this tweet, or True Social post, where it was back in, I think it was, I believe that's October, unless that's a retweet, don't matter. Cattle ranchers who I love don't understand that the only reason they're doing so well for the first time in decades is because I put tariffs on cattle coming in the United States, including that 50% tariff on Brazil. If it weren't for me, they would be doing just as they've done for the past 20 years. Terrible. It would be nice if they would understand that, but it would also have to get their prices. They also have to get their prices down, because the consumer is a big factor in my thinking also. So you're not really worried about America first. You're only really wanting a bunch of cheap shit. Additionally, it was your tariffs that caused the price to go up. So you just said in another video that the tariffs are going to start working for people. So let's check that out. Back in July, Trump puts Brazilian beef tariffs. Here's a live cattle chart. Here's July. Kind of looks to me like that chart was just going way up. I mean, that's an uptrend to me. Oh, my Trump viewers don't see it? Okay, here's July right here. This is an upward notion. Now, what date did that tweet come out? Oh, it came out right here on that specific date at this very top, and then the price has been down ever since. Interesting. Once in a while, I watch this channel if the clickbait intrigues me too.
Right now is, instead of allowing our American farmers to eke out that tiny profit, we're going to bring in more foreign beef. So, what are we doing here? I don't understand it. I want you guys to chime in there. This is not politics. This is just policy, and I want to understand it with you. Why are we bringing in, we're trying to, first of all, bring back American manufacturing. But in order to make it cheap for the masses to eat, we're bringing in foreign beef. That don't make any sense to me.
You know, it's just policy when you post on your True Social / government page to go ahead and pop the bubble. And here on this little clip video fast forward thing, you can see the year and you can see the number of cattle, and you can pretty much see what was happening when. As you get into these ethanol years, the number of cattle decline. Well, why did the number of cattle decline? Because markets chase profit. You know, nobody's in a computer chip business when it's doing very well and says, oh, I'm done with these computer chips. I think the next thing's going to be getting into raising Siamese house cats. You know, that doesn't happen anywhere ever. Nobody's going to do that. People follow markets. So yeah, ground got tore up and taken from pasture and put into row crop production because it was an ethanol boom. People chased the market. People didn't do this to themselves. People reacted to market conditions. There's a difference.
September 2025 showed just how desperate things have gotten. There was supposed to be a small meeting in Brooklyn, Arkansas, with field representatives from congressional offices. Maybe a handful of farmers would show up to discuss their concerns. Instead, over 400 farmers packed the building to overflow capacity. This was on a Tuesday in the middle of harvest season, with only 3 days' notice. Farmers left their fields during the most critical time of year because they were that desperate. The economics are completely upside down. Hunter Byram, an extension economist with the University of Arkansas, laid out the numbers in December. The value of Arkansas crop production has fallen by $617 million since 2024. Commodity prices for corn, soybeans, rice, and cotton have dropped 27% since 2022. But here is the kicker. Input costs have not dropped at all. Seed, fertilizer, chemicals, fuel, equipment. Everything farmers need to buy stays expensive, while what they sell gets cheaper every month. The federal aid package announced in December shows how bad things are. The government is sending $12 billion total to farmers nationwide, with $11 billion for row crops. Arkansas farmers might get around $315 million of VIDAT based on previous distribution formulas. That sounds like a lot until you realize they have lost $617 million in crop value. The aid covers about half their losses. It is like your house burning down, and insurance only covering half the rebuild cost. What is driving prices into the ground? Brazil and Argentina ramped up soybean production massively over the past few years. When trade tensions started, China shifted their buying from American soybeans to South American ones. Brazil is now the world's largest soybean exporter. They are harvesting right now in December, flooding the global market with supply. Every bushel they harvest pushes Arkansas prices lower. The Arkansas Agricultural Council is warning that 1 in 3 farms in the state could be shuttered by spring if something does not change. Andrew Grobmeyer, their executive director, calls it a true disaster looming on the horizon. Banks are projecting farm bankruptcy rates between 25 and 40%. That is not a recession. That is a complete collapse of rural Arkansas. Bailey Buffalo runs Buffalo Grain Systems in Jonesboro and serves as president of the Farm Protection Alliance. He is 40 years old and says this is the worst farming situation he has seen in his life. He points out something that most people miss. Farmers are the only players in the entire agricultural supply chain who cannot pass their costs down to someone else. When fertilizer companies raise prices, farmers pay them. When equipment dealers raise prices, farmers pay. When fuel goes up, farmers pay. But when farmers try to raise their prices, the global commodity market says no. Scott Stiles, an extension economist, explained the cruel irony. If you owned all your farmland outright, paid cash for everything, and had zero debt, you might be able to pencil out a tiny profit at today's prices. But most farmers are tenant farmers. They rent at least some of their land.
How many of you guys have been watching videos like that on the internet? They're interesting. Got a lot of good statistics in there, but they never quite paint the whole truth, and they're probably propaganda-based. But when they start talking about trade relations, what they should be bringing up is the currency wars that we have going on thanks to the Fed. Now, as to why the Fed's reacting and shoring up our dollar and everything else is because of the policy from our government, which is a direct reflection of society. But I'm not seeing a whole bunch of farmers on the Federal Reserve's page or social media blowing up their comment sections saying, you know, you're destroying our markets. If you've been following this channel at all, which hopefully you guys have, and there seems to be about 100 of you that hang on pretty well. But if you have, you'll notice that when the dollar rises, that inflation shrinks. And inflation shrinking usually means that grains go down the drain. It's a wonderful system to shore up our economy and give Americans the quality of life that they desire. Comes as a sacrifice of global sales. Now, you guys that keep banging the table saying, oh, it's the high-priced seeds, the high-priced chemicals, blah, blah, blah. Well, yeah, those things could probably come down a little, but you have clearly forgotten that companies are investment firms, which I've discussed in previous videos, and it's not going to be coming down because their costs have risen and they have to return profits to shareholders. It's globally competitive. Now, our prices only, you know, when grain goes up, everything goes up. Well, gee, yeah, that's how inflation works. Shortages, commodity-driven shortages are inflation. And when that happens, grain goes up, then everything else follows it up. The problem is that inflation that follows it up is domestic and grain's global. Global's not inflation. Global's just supply and demand-based fundamentals. The inflation that we get suffered and the reason things stay higher is because those are domestic. So yeah, that's why your dollar doesn't buy as much here at home. That's why everything you buy here at home keeps going up. But the shit that you're selling on a global scale, meaning around the world, has to maintain on global pricing. That's the problem, is the imbalance. So in simple terms, commodities don't inflation adjust. They react to supply and demand. Probably a few of you guys follow this guy's channel on TikTok. Let me introduce you to the most ignorant person in the world. Let's see what he has to say.
So there's been a lot of talk about how consolidation in agriculture is the #1 problem that we have. The consolidation in the input side, in the equipment side, in the real estate side, right? Consolidation is the buzzword right now. It's getting brought up in documentaries, and we're investigating things in our government, right? But the consolidation is a side effect of the actual root cause, which is greed.
He's right. Consolidation is a side effect. But it's not greed, it's inflation. But you don't understand that there. Speak like this guy. Let's see what else he has to say.
Oh, if you're a corporation, you want more market share. In a lot of cases, it's at all costs, right? The shareholder is the most important thing, so we've consolidated. On the real estate side, it's been companies wanting to own all the farmland, or, even...
They do? Oh man, I was looking through the plat book this morning, and I just didn't realize that Berkshire Hathaway bought most of our entire county. Oh, they didn't. They didn't. That's not a thing. Kind of like the Chinese buying up all our farm ground. Oh, that's not a thing either, because so far as nobody's actually pointed out any CCP party owned farmland. Oh wait, they're just Chinese people that were here that bought farm ground. So hey, if we get a judge to go along with that, are we going to profile the German people that bought farm ground here? Should we give it back to the Indians? I mean, where do you start and stop and draw the line? But as far as those corporations buying ground, there's some investors out there. But, I see some neighboring farmers that still operate the traction themselves that are INCs and some LLCs. So is that a corporation? I don't know. You tell me there, Mr. Patrick. Ryan Patrick. Continue on.
In real estate, whether it be houses, etc. Corporations wanting all that. But there's also a lot of farmer consolidation and greed. I want more, I'm going to get bigger.
I got you. So it's not possibly a byproduct of the fact that 300 acres wasn't going to cut it anymore. They had to jump up to 500 to maintain a quality of life because the profit per acre was lower. Gee, it's just all greed driven. Just fuck these guys. I'm just going to take it from them. It couldn't have possibly been that I want to feed my family a little better. And it's just a byproduct of the inflation and everything that I talk about in this channel. Interesting. Continue on.
Is much of a problem, or more, than any of the consolidation on the input side. I would say that one is probably a product of the other, but if you look at the actual root of it, yes, it comes back to greed, but what drives
it doesn't.
the
It
greed
comes back to the Federal Reserve.
is ego.
Ah, yes.
So
Egos.
earlier today, the video I did talking about the 1086, the
has nothing to do with the entire monetary policy, global market systems at all, and tax code. No, it's all out the window. It's greed and ego. I got you. My God. And now we're back to the picture, and you can see why. My God, the level of ignorance in some of these social media accounts blows my mind. They literally don't know how anything works whatsoever, but they will die at the stake for what they think or think how it works instead of even remotely trying to educate themselves whatsoever. Pathetic. But that's why this channel exists, and for you very few that enjoy it, thanks for watching. And if you got questions, as always, put them in the comments below. And for those of you who are confused how Trump got elected, well, that guy's how. Good grief. No, that's not an advertisement for the Democrats. They're just as bad.